Three types of trade options. Price goes through a process, and along that process there will be various types of trade options we can do. Learn to recognize. The three types of trades will run through any method or structure we care to use. Here I'm going to use gaps, and then maybe we'll take a look at lines. But first let me define a gap. Wide range bar, bigger than the last three bars, with a space between the previous bar and the subsequent bar. And how I'm going to mark them is, if it's an up gap, I'm going to mark the bottom third. Quite simply, if it's a down gap, I'm going to mark the upper third. And then I'm going to look for the process, three types of trades along there. Now there's a field behind each one of these that I want to get across. So I call this a push trade for a reason, because it's got momentum to it. They're pushing, right? They're pushing a market. They're in a hurry, small swings. In this case, a gap. They're pushing a market. And here, type 2 is when they let some air out, expand a little bit, and then roll. That's a type 2 expand and continue trade. So it expands a little bit and rolls. And a type 3 is just a flat out change in behavior. Now you have to reverse all these for down gaps. So let's first learn to identify them and then get this feel across. So a push trade. First we see a gap. Wide range bar, bigger than the last three bars, with a space. We can mark the bottom third of it. And so this would be a push trade relative to this up gap. This gap here, this would be a push trade relative to this up gap. See, we're pushing. We're not waiting for the market to expand and then continue or reverse. We're pushing a certain momentum with this kind of a thing. You never know which one it's going to be, but when you learn to identify it, then you can go ahead and do research, and rather than have anybody tell you, you can learn the context where these things apply. So let's look for a type 2. So when you see a gap, you can mark a gap, and you can feel, right? There's a certain urgency in here. You can feel they're just pushing this market. So this would be a type 1. Anywhere along here is a type 1 to keep pushing this gap. When it goes through, that's a possible type 2 trade. Expand, then continue. Alright, so let's find a type 3. So we can see the process. You're going to have to reverse this model because we're using a down gap. But if you look, you can see the market is going down. And if you want to keep pushing that momentum, this would be a type 1 push to continue on its merry way. This would be a type 2 expand and then continue, and then this would be a type 3. So this is a type 3 reverse. And this is a type 1 push relative to the gap I am marking. One of these days they'll build spell check into here. And here we have our type 2. Expand, then continue. relative to gaps. Now let's have a quick look so we can get a feel for this. I'm going to go relative to lines now. We know how to mark swings. We know what a major swing is. It's the biggest reaction leg on the board. And to understand the pushing, what you'll see is the market makes this swing and there's momentum. They're pushing. They're pushing. They're pushing. Right? They're pushing these small swings. They're in a hurry. That's why the swings are small. And so any trade along here is to continue that hurry. And if it expands, then that's a type 2. And if it's going to reverse, the type 3 will be here. And so you can get a sense how a market can be in a hurry, right? It can be in a big hurry and just expand, say, into the major swing. And this happens quite often. And so you can use this with any line, any structure. It doesn't matter, but there's a feel behind the push and the expand and the reverse. So you can see if I was to use just a simple line here, on these swings, so we have swings now. If I was just to use a simple line here, that's pushing that line to keep going down. So that would be the push, that would be the type 2, and this would be the type 3 to reverse that process. And so this is a great way to be able to view and see a market, but understand the feel behind each one. Understand, and it helps to say, I don't know, see your major swing, and then if you can identify it, see your minor swing, because the minor swings are minor because they're pushing. They're pushing. They're pushing. They're pushing. I see them. They're trying to just keep that momentum up, which can then expand and then continue. And you know, this is a basic lesson, but later on you'll see how this, you know, relates to your median lines. So anyways, hope you enjoyed the lesson. Those are the principles, 3 types of trades. It can be relative to anything, but get a feel for what's behind them.